Welcome to TradeTheMBI.com. This is John's Reporters for the 29th of October. Yeah, well, market doing exactly as we thought. Still continuing to push highs and still looking strong from an MBI reading standpoint. Short's not really even active here in this case. Now we're back below the 25. It drops down below the 10 and even be stronger. So, barring any end of month shenanigans, things are still strong. Now we'll see how that plays out. Obviously, intraday will get the better reading. Positive shakeout. So this was the critical element we were talking about from the increase. As long as we were maintaining that move, you needed to move towards positive shakeout to continue the direction, and that's exactly what we got. Interesting here, though, you formed a spider, so we could see a little bit of interim weakness if that maintains itself. Of course, that's where it is right now. Day hasn't completed, but we're starting on the plus side of futures from the European session as it is right now. And from an NQ standpoint, you can see much stronger, and the readings have been clearly stronger in that, and you still have a sign under red from that daily, and much stronger positive from the shakeout. So you can see a little bit of a bifurcation between the two markets there, and the difference being is that the NASDAQ positive extremes that aren't existing in the S&P. So, that gives you your retraces, 26, 25.6, and then 26, just under 26 for that low. So right on those edges, those become the benchmarks, particularly in intraday selling. Gives a broader idea. From a treasury standpoint, everyone's still expecting the Fed's probably going to make another cut at some point. Exactly when, we don't know, and they're just sort of like... It's really an interesting one because, for as much as they were in the news during Biden as far as controlling everything, completely absent this entire year during Trump, and really kind of at odds with everything he's done. And of course, everything they said about tariffs and that didn't come true, but yet they're still right. Because eventually, we still keep talking about this, but eventually they'll be right. From an oil, okay, the big spike kind of eased off there a bit, and we have an MBI white spike here with magenta and that failing. It's not quite below yellow yet, so you would need to see that magenta dip below the yellow there. Then you would expect to move back down to those lows, which would be helpful and make this a transient spike, to use their terms for transient inflation. Remember that from all those years ago? Yeah, that didn't work out so well, and we knew that wasn't going to work out so well. So from our euro standpoint, they're still, holding on, literally, just barely. Not that they're doing anything economically, it's just, can't use the term, but it's a sad show, that's for sure. Gold, from its standpoint, having filled back quite a few of the positive streams down to the 50%, got all the way back to here. Still not looking particularly strong. We're seeing a bit of a reprieve back as the magenta is making its move back over. See if it's able to sustain that. That would be the end of the brief pullback. But as you can see, in all the time it takes you to move up, it only takes a third of that time to dip back down. That's just the nature of the selling beast. From cryptocurrency standpoint, that still in a negative mode with Bitcoin in that, though. What's interesting is, though, if we do get a dip back of MBI white with magenta rising, you would then have the potential, like I said, until that actually takes place, you're not going to break that 50%. It's exactly what we were looking at from before, and exactly the same thing with an ETH. It's just a much stronger short position. There just aren't enough buyers to do it. There are enough buyers to keep things interesting as far as support-wise, relatively speaking, but people are still attacking it to the downside, so it's going to continue that way. But from a 50K, continue to just follow the upline for that. No real challenge at this particular stage to the upside, and that's what we talked about the other day when we had this DOC reading. It was crazy, minus 31. As I pointed out, that could give you some weakness, but at the end of the day, as soon as you got back above, you were going to spike. And sure enough, you just follow that. We peaked right there, was the beginning of another brief dip, and then boom, take off. So it's just a matter of taking the opportunity to utilize the fact that you had that steel move and what it was going to lead to. And it did exactly what it should. Just sometimes it takes longer than you want it to. And that's because they need to build a position. And you can't do it all at once. It takes a little time. You got to kind of fool people, and then you can, let it go from there. So from a 5-minute chart view, we started with the early weakness. Once they got some puts excited, there was enough short interest built into that. They were able to drive them exactly the opposite way from an option standpoint, and boom, you drove that all the way up to the highs. And then right before the end, filled it back in a little bit just to cut off some of that. And then in the Asian session, it was pretty rosy all the way through. You got Trump and Xi talking, so everyone's happy about that situation, and there might be a resolution, and it's carried through here into the European session. So we'll get ready for updated indicators for November, but what a good month. Very exciting. All the volatility that was expected right in there. Will that continue in November? And I think November is probably we're going to see a little bit of softening in some of that. It'll be interesting to see what happens in New York for the election and that, because that could be a little disrupt for the ecosystem of where traders are, because they're looking at a world of hurt depending on how they vote. So that's a whole different story. As always, anything relevant, I will put it on our team chat. Have a good one. Trade well.